Yes, welcome back to Trade Like Skills channel. So guys, have you been wondering how I'm making these profits each and every time when I'm trading? In this video, we're going to look at how to beat stop loss hunts and protect your trades. Stop loss hunts are one of the biggest challenges traders face, but with the right strategies, you can outsmart the market and safeguard your profit. But before we go deep into this, I would like to introduce to you my free Telegram channel. You can check the link here and then you tap on this link and then join. You can join it's free of charge, my free Telegram channel. It's free of charge. Meet your friends and make more money, guys. Make your money, more money. And if you want to join my VIP, you can as well join my VIP. And if you like my videos and the information that you get from them, you can subscribe to this channel and also like and comment and share. Without further ado, let's start our work. So many of you have been listening to people talking about stop loss hunts, and market is hitting their stop loss. Whenever you take your entry, you are always hitting your stop loss. Why? Because of some issues. Maybe you don't have a strategy. Maybe you don't know the zones. Maybe you made your analysis in a wrong way. So in today's video, I'm going to try to explain to you how you must fight the stop loss hunt, or your stop loss can't be taken at any moment, guys. Now, look at this. We very well know that when the market is moving, creating higher highs, is in an uptrend. And when the market is moving, creating lower lows, is in a downtrend. So we are having a market here. This is gold, 15 minutes. Gold has been moving, if you can see here, I've been moving higher highs, and the market is leaving more imbalance, more liquidity behind. So there is a lot of inefficiency in the market. So anytime that this shows you and indicates that anytime the market is going to drop and come for this inefficiency or come to sweep all this liquidity and fill the imbalances or the inefficiencies. Now, when we see what the market was doing here, it was breaking, going higher highs. And we are seeing a good big imbalance or fair value gap here. The market left, and then market continued breaking higher highs. I think I forgot this BOS here. Here was a BOS. This is a first sweep. And then this is a BOS, break of structure. Now we can see this market was going higher highs, as we can see here, but leaving more liquidity behind, more inefficiency behind, and just going higher highs and continuing to the higher zones. So we very well know that in an uptrending market or a bullish market, we only take buy entries. But what if the market is going to lie to you and then you drop into the market when the market is changing the direction? What if that happens? Okay, this is good to combine liquidity and more other concepts so that it can help you to understand the zones where you can take your entries from. Now look at this market. When the market moved high, it was supposed to come to this order block and then continue high, but the market instead failed and retraced back and dropped and created this BOS. Now after creating this BOS, now we know that the market is breaking the lower zones or the lower structure, and then market retests back. Why? Because the market is breaking to the lower zones now. It has failed to move this move to the higher high to break higher high. Now it's showing you that anytime I'm dropping, but we can't forget that behind, when the market was moving, was leaving more liquidity and inefficiency. So there are zones that might resist the market, or that might become demand zones for the market, and then the market goes high. Also that can happen. Now what happens here, when the market came back in, it tapped here, and this was a newly formed order block, as we can see. So this was a newly formed order block that was supposed to drop the market down. And I think you see how many times the market retested that zone before breaking it. So this zone was totally strong. Why? Because this is the zone that failed to move until breaking the higher high, since the market was mainly in an uptrend. So what happens here? The market drops here, retesting this zone, and takes liquidity that has been left here. This was an internal liquidity, but we can't forget that we have more liquidity behind that is left here, and also liquidity that is left here. So what goes on here is that the market goes up again, takes all this liquidity that was newly formed here. We know that whenever the market is leaving more wicks in the zone, either upper zone or lower zone, so this was a buy side liquidity that the market was coming for, and this one is sell side liquidity. So we know that the market is moved by liquidity alone. So all this was liquidity left behind. Let's mark it. And also this was liquidity newly formed and left behind that should be waiting for the market to come and sweep. So we see very well that here we're having two liquidities. There is liquidity on the buy side, and there is liquidity on the sell side zone. So what do you think is going to happen? When the market hunts this upper liquidity, here was a newly formed supply candlestick. To those who don't know that, maybe you should join my mentorship and learn. And this zone had to push the market. Of course, this zone was strong. Why? Because this is the zone that was broken by this longer candlestick. So this zone was strong, and market was taking liquidity. After taking liquidity, it had to hunt for lower liquidity. So this is what happens whenever the market is consolidating. It's not having a right direction where it is going to. Now, after breaking, we now confirm that now the market is changing to a downtrend. Now, I want you to look at this picture. Look at this liquidity that has been left here, and this liquidity, and also this order block, and also imbalance here. So that means that also below this order block was liquidity. All together, here is liquidity that was left behind that wasn't taken because the market has not mitigated the lower zone yet. So this zone 2 is full of liquidity. So the market might come for the zone 2, right? For that liquidity. Now let's see what we do here. We're having liquidity here, and now I'm having all criteria that are making me to take a buy entry here. Why? Because this is the first order block after a lot of liquidity here, and this is the imbalance of fair value gap that I'm seeing here, though we're having lower liquidity below here. So that means if we enter from the tip here and we put our stop loss here, it might be taken. So that's where stop loss hunts comes in. Now, how do you beat stop loss hunts? We do it in 3 ways. There is waiting for the market to come into your zone, and you do what we call lower time frame confirmation. And there is also aggressive, but entering from the mid of the zone, in which you are in, or the order block. There is also layering when the market is going down, when you are taking a buy and the market is going down, but you know that there is liquidity that you are just taking, and then you layer until you make the money. So the first way is to do what? Is to wait for the market to come to your zone, and you do what we call lower time frame confirmation. To those ones who don't know about those things of lower time frame confirmation, you can check the video. I'm going to leave it there. I think you can see that. And then also you can also check in my recent videos if you have not seen that, or you can rewind back, and then I'm sure you're going to get to understand lower time frame confirmations entries. Now the next thing is aggressive entry. Then the aggressive entry that most people do, let's play this out and see. Now we can see that the market has reached in the zone, and someone is going to hurry to enter in this zone. What is going to happen? The market might come down. If someone is entering from this zone and is putting their stop loss here, let's say, let me give you an example. Let's say you have entered from this zone and you're putting your stop loss, let's say here. You know what you have to do? This one is going to be taken out by the liquidity sweep altogether. So sometimes when you see situations like this, you know you are in a wrong direction. Firstly, you know that the market is changing to the lower direction or to the downtrend, and you know you're going to buy in this zone. That's a risky zone, so you must be ready for anything that is going to happen in the market. But the only thing that you have to follow are the first criteria that will show you that at least the market will give something good in that zone. And also, if you are having all the confirmations that you need, liquidity, imbalance and all, I'm sure the market will give you what you need. Now let's see. If this market will leave the stop loss here, the stop loss will be taken, I'm sure. So that's the first thing. You either make your stop loss large, or you wait for the market to first sweep liquidity and then you take an entry. You take an entry. Now let's see what happens. If the market, someone enters, I think you can see, if we are still putting our stop loss here, it will be taken by the market. But after waiting for the market to sweep liquidity, I'm sure you will take an entry again and then you move high. But it's always better to do what we call a lower time frame confirmation, and then you get to make good money with the market. Now, if someone entered here like we did, we had to only target these zones. We only had to target these zones. Though some of us had to layer up to this zone, and then we could target 3363, and then our stop loss were tight, of course, because we had already layered. So the more the market moves up, you have to close those first entries and you leave the layers, and then you set BE to the layers if you see the market is in profits. Now let's play this and we see. And now the market had to move high, and as you can see, I'm going to leave the screenshots of these entries that I took, and then let's see what the market did. Boom, we hit our take profit. Now, after hitting our take profit, it was 400 pips. Imagine, in one day, one trade, 400 pips. So this is how we do it, guys. It's all about waiting for good trades, and then you take the entries. Now, after hitting our take profit, we already know that this is a zone that could react as a breaker block and could push the market low. Why? Because we know that the market has changed the direction now. So we had to close, and we call it a day. And I think you can see after that, this is what happened. The market had to drop. And you may ask, why didn't you give a trade of sell on this market? It's because, firstly, this was not in either this order block, because for me, I don't trade breaker blocks. I wait for my confirmation zones, and then I take my entries. I don't take fake entries, guys. Yes. On my side, if the entry is not working with my system, I call them fake. Okay, guys. So if you want me to make any video about any other thing that you want to understand, you can put it in the comment, and then so that I can be creating more content so that you can be understanding the markets deeply, guys. So don't forget to get to my Telegram channel, my free Telegram channel, and then you get to get a lot of good things here, guys. So you can check the link here in the description, in the bio, or in the description down there below. Then you join my Telegram channel, guys. All right, let me see you in another video. Thank you so much. Ciao.